Welcome back, investors, to Ticker Time News. I'm Adam, and any expectations for a rebound today came from nowhere. It disappeared. All of last week's big losses, they just dried up and continued to pile on. The major indices soon were backsliding, pressured by ongoing earnings concerns, weakness in mega cap stocks, tax loss harvesting, and a Bloomberg report highlighting a rebalancing disposition that will presumably favor bonds in the last few weeks of the year, specifically TLT. We're going to look at TLT today to see if that is something we should be looking at for year end. Could we have a TLT trade in the works? Now, bonds, however, they didn't fare so much better today than the stock market did. They were also under selling pressure throughout today's trade, notwithstanding a weaker than expected NAHB housing market index report for the month of December. The 2-year yield, it jumped 5 basis points to 4.25%, and the 10-year yield increased 10 basis points to 3.53%, keeping the QQQ down until the end of the day. And that's where I want to talk about on the chart. Here in front of you is the chart of the SPX. That is the ticker. It tracks the S&P 500. Now, 15-minute time frame. So we've got the month of December, all the way from the month of December to today. And then we go back to about the 8th to the 10th of November. So we've got about 2 months worth of data here, and it's very, very fascinating. And this is why I have an open long position in the QQQ, because there's something similar happening over there. And we're going to look at the SPX SPY QQQ in just a moment. First, starting with the SPX. What I want you to pay attention to here is what just happened last week. Okay, we get this big move down, right? Expansion leads to contraction. Contraction leads to expansion. It's like you're breathing, right? This is how the market breathes. Expansion, contraction. It'll move quick and fast, and then it will slow down. It'll start flagging or wedging or maybe building a pennant or flagpole, right? Okay, so here with the SPX, and you're going to see this with the SPY QQQ, and actually the IWM is very close as well. Okay, so we had the big expansion move down. Okay, what's forming right now? We're wedging right here. This right here, we have the top line and we have the bottom line. They are wedging together, okay? So number one on my list is wedging, okay? I just pointed that out to you. Expansion leads to contraction. Even though we were down in the SPX 0.9% today, call it 1%, we were still in this wedge pattern here, okay? The free fall that we saw last week kind of slowed down a little bit, right? All right, something else I want to point out to you, the weekly expected move for the SPX. The two purple lines, the purple line up top right there, and the purple line at the bottom. Now, up top, the weekly expected move is 39.40. 3940. On the bottom end, the weekly expected move is 3764. 3764. Now, with today's move being down nearly 1%, we were definitely heading towards the lower end of the weekly expected move. Remember last week, we started at the top side of the weekly expected move, and we went all the way to the bottom side of the weekly expected move, but closed within it, like we do 68% of the time. Now, the top end of the weekly expected move for the SPX, look at where this lines up. Right through here. Okay? Right here. Okay? Right here. Do you think the options market does anything by chance? No. If you are playing options, you are doing probably a lot of research, studying, and preparing, and you're using a specific strategy. Well, the weekly expected moves come from the options market using an equation like implied volatility and everything else that's included. So I find it very interesting that the upper end of the weekly expected move, if, or I should say when, we do get the bounce in the SPX by QQQ, I don't think it's going to go back above these three areas that I marked, because that was support back then. Old support becomes new resistance. So if we do happen to catch a bid and we bounce, this will be resistance. That's one of the first things to point out there. Okay. All right. The next thing I want to bring your attention to is the RSI, Relative Strength Index, and the PMO, which is the price momentum, excuse me, I totally forgot for a second. Price momentum oscillator. We have a positive divergence building. With the RSI down here, we are making higher lows. Well, what are we doing with price? Price action is making lower lows. On the PMO, price momentum oscillator, we are making higher lows. This is a positive divergence, okay? Meaning that on the RSI and the PMO, we're going up, but price action is going down. That is a divergence. It's a positive one. It's a sign that, hey, wait a moment, we should be moving up with price action. Call it an early indicator. Like I say multiple times, you can't just use one indicator to base your thesis on where the market is going or where a specific product is going, like the S&P 500. You have to look at the total. I messed that word up. You have to look at many different indicators, like we're doing right now in this little exercise. We've got the weekly expected move. We've got a chart pattern, right? And if we go over here to chart patterns, right? And when we look over here for, let me get my marker here. When we look for the wedge, right, we came down quickly and we're starting to wedge. It's right here. Okay. Now, what typically happens? You have expansion, which leads to contraction, a wedging, and then you typically get a reverse from that. And this is a bullish sign. This bullish sign right here is what I'm ascribing to this move down. I already have the bottom support and the top resistance wedging coming to a point, and that typically leads to a reversal. Okay. Let me clean the chart up here a little bit. So price action going down, all right, heading towards the lower end of the weekly expected move, but we have divergence with RSI and PMO that are positive divergences. Okay. So I do think at some point in the short term, we will get a bounce out of the SPX, the SPY, the QQQ, and the IWM. And when I say short term, I'm thinking this week. Okay? It's been several days of falling, or several sessions of just straight up falling. I do believe that's about to end. Okay, let me go show you the SPY so you can see how the setup is nearly identical. Okay, now first we had the expansion move down. Now when I take the top and line it up, you can see right there. I need to change that to red because that's the resistance line. Now I'm going to add another one here, and you can see that they are coming together, forming a wedge pattern there, okay, on the 15-minute time frame. Now, let me draw another trend line. Let's go down here to the RSI and move this out, and you can see it is a little subtle here for the RSI, but these are higher lows. Now, I'm going to make another one on the PMO, which is the price momentum oscillator, and it is moving higher as well. So we have three indications that this market is getting overextended, and with the positive divergence, with the technical pattern, the falling wedge, these are all bullish in the short term. Okay, we had our expansion move, right? Big expansion move down. We are contracting now, going between the resistance and support. And once we reach a certain point, it may just be we reach the lower end of the weekly expected move and then we bounce. However, I'll zoom in here in just a moment on the 5-minute chart and show you just today to help you see how at the end of the day, like the last hour of the day, things turned around for a lot of these products. All right, the weekly expected move for the SPY on the upper end, which again, it is catching all of these critical moments here, right, of support. The upper end is at 392. The lower end is 374. Write those numbers down. 392 on the top, 374 on the bottom. All right, let's clean this up. Okay, now we're going to go to the Qs. And you're going to see a very, very, very similar pattern here. Okay. Now, the Qs were in a specific pattern. If I go to the daily view, you can see it. It was in a trading channel, an ascending trading channel, and it broke through it right here. Okay. So if we're just looking at today it broke through that. Friday, it came down, it tagged it, found support there, and rallied back up just slightly. Today, it broke through it, though. So I want to point that out. That's a little bit different for the Qs than with with the SPX or SPY. All right, now, let me put these trend lines here. We've got our top trend line, which is going to be resistance, and our bottom trend line right here, and you can see that they are wedging together, and that is going to be support. Now, one more thing, or two more things I should add. First off, let's go ahead and go down here. Look at that. We've got support there for the RSI, and we have the same thing happening here with the PMO, price momentum oscillator. Look at that divergence. That's really moving up, that momentum there. Okay, so we have the falling wedge, right? We had a big move down, expansion, which leads to contraction, prices wedging right here. And just like I showed you on the chart pattern with a falling wedge, price comes down, it wedges, and then it typically will be a bullish sign and it will pop and it will break out. Okay. Then we have our two divergences on the RSI, relative strength index, and the PMO, price momentum oscillator. That's a positive divergence because price continues to move down 1.6% today, but the RSI and the PMO are moving up, making higher lows. Okay. Now, the weekly expected move for the Qs, I think we'll probably get there before we turn around. I could be mistaken. It could happen tomorrow. It may not happen till Wednesday or Thursday. But the lower end is 266. All right. The upper end of the weekly expected move is at 281. Now, 281, look at all the interactions here at that price point. This will be resistance on our way back up. Okay. And when I say that we're going to get a bounce here, I don't think we're going to get a bounce all the way up to the upper end of the weekly expected move and then find resistance there on Friday. No. But I do think we will be moving in that direction. It's just things are standing out to me right now saying it's like the submarine alarm going off to take cover, battle stations, because we're about to do a reversal. That's what I'm seeing. We're becoming oversold. And when you get to these overextended positions, you typically switch because the market doesn't move in a straight line. All right. So weekly expected move on the bottom, 266. I think we are getting there. We are going to move up. And again, like I said at the very beginning, this is why I have a long position open. It's currently open for the QQQ. All right. I'm using the ticker TQQQ. It's a 3x leveraged for going long on the QQQs. Okay. So it's T and then 3 Qs. That's the ticker that I'm using. Now, in my book, risk to the downside is shrinking, while the reward to the upside is growing right now. So for me, as the market had moved down since I started to build my longer position, and this isn't a long position like I'm going to take it and ride it until the end of the year. I'm building a long position for the Qs so I can catch the rebound, the turnaround. Okay. It may last only 2 or 3 days, maybe less. I mean, we'll have to see. No one's got the crystal ball for that, including myself. But when we look at these signs, the divergence with RSI, the divergence with the PMO, which both are positive because they're making higher lows while price is making lower lows. Okay. We have the setup here. We've got the falling wedge that typically leads to a reversal. So all the signs are there. Now, if we actually look at whether or not we are in a technical oversold condition, we are not. The RSI is at a 35. 30 and below is oversold. 70 and above is overbought. So we still have 5 more points that we could go down before reaching that oversold condition. I just want to point that out. Those are the numbers. Now, I said last week, specifically talking about the Qs, that 270 support would step in at 270. Guess what happened today? We reached 270. And we actually stayed there bouncing around it for a while. We closed at 269.75. That's 25 basis points, or 1/4%, or 25 cents, however you want to look at it, right there underneath that 270 level that I said support would step in at on the Qs. And it did. I added more when we got to 270. I don't have a full position size at the current moment, but it is building. As we moved lower last week, I was adding to it. That's how you play these choppy markets. Okay? Now, going short on the S&P 500 and catching this move down, wonderful. Or even maybe you're going short in the Qs and you caught this thing going down. Great. But now we're starting to get the signs that we could potentially bounce, reverse our trend or short-term trend. So you want to make sure if you were shorting this, don't start shorting it now. You never short while you're in the hole. Okay? Don't short in the hole. We've already dropped significantly in a short period of time. This is when, if you were shorting, you want to start taking some of that profit off the table so you don't lose it. Okay? And this is where you want to start building the long position. And again, these are short-term time frames. This is where you want to start building that long position. So when we do get that bounce and that move higher to what, I don't know, because if you look at the Qs, it was pretty obvious that we were going to fall once we broke this level right here at between 280 and 278, because, I mean, look at this, just straight down. So it went straight up when we came through this price point the last time around. All right. And you can also see, too, at that 281 where the upper end of the weekly expected move is for the Qs. I mean, look at this volume shelf profile. It like goes out like this. Like beautiful distribution pattern. Okay. All right. Now I'm going to zoom in here for today. Once I zoom in here, I'm going to go to the 5-minute chart so you can see it a little bit better. Give me just a moment to adjust the chart. Yeah, things are getting pretty oversold here. Yes, sir, they are. All right, let's get this opened up here a little bit more. Okay, now, just so you know, and I'm sure that you do, when you're making trend lines on one time frame, those trend lines don't necessarily line up when you change your perspective and your time frame, right? If you go from a 5-minute to a 15-minute, that trend line, it's not going to be just right. You'll have to adjust it because you changed your perspective. Think about looking through a window. You look at a window on the left side of the house and you see a certain landscape. And then you go to the right side of the house and look out the window. You got a different perspective. That's what happens when you change time frames. Okay, here, this is what I want to point out. This was today, all right? Today actually opened, actually, let me do this. Look at this rally into the close on Friday, right? Okay, so today we open up, we end up going down right out the boat. People were selling into strength all day, okay? We got down to the 270 level, which first hit right here. And then again, down here at this bottom, right here, was also 270, okay? So from the first bottom this morning to the second bottom right here, that's the 170 zone right there, all right? You got 170.00 on the bottom there and 170.99 on the top there. So we hung around in that, I'm sorry, 270. My apologies. We hung around that 270 for a long time today. And then, that 270 becomes support. Then at kind of the end right here, 270 becomes resistance. 270's resistance. And then look at this. We get this nice move up right here. And we get right there. We actually break and get into the 270s. 270.22 to be exact. And then we pull back to 269.75. Now, the last time I checked in the after hours, it was back above 270. So if we can turn that now into support, like it was earlier in this morning, then, that would be great. But again, this is me thinking that we're getting super close to a short-term low and price is going to reverse on these products, okay? So this, again, this was the 5-minute time frame for the QQQ. All right, let me pull up the IWM, which are your small caps. I said I would. Nearly identical pattern, right? Okay, so on the 5-minute chart, you can see at the end, we ran up and then we sold into strength on the last 5 minutes there. All right. So going now to the 15-minute chart, okay? And I got to adjust this. Hold on one quick second. The only reason I'm bringing in most of November is because I want to show you where that upper end of the weekly expected move is. It is fascinating, okay? The upper end of the weekly expected move for the IWM is 179, okay? 179. Look at this. Look at the price action at that 179 here. It gapped right below that line when it finally broke down, okay? Okay, now on the 15-minute chart here, let me get the rest of December and November in here. Okay, there we go. The reason I want to get the beginning of November, the end of October, is because, again, at that price point, there was a lot of price action around 179, 180. Okay? Okay. Now, the lower end of the weekly expected move is at 169. 169. Now, let me just move this over just a little bit here. All right, let's get our trend lines real quick. This will be the last one I do a trend on unless you guys ask for one specifically. All right, there's the top trend line, which is resistance. There is the bottom trend line, which is support for this falling wedge. It seems like everything is making a falling wedge pattern. And now we slip over here to the RSI. We've got a positive divergence. And when we look at the PMO, we also have a positive divergence, okay? So again, we got that falling wedge pattern here, and we've got positive divergence building, all right? Okay. That's what I'm seeing for the main indices right now. The SPX and the SPY for the S&P 500. The QQQ for the NASDAQ. The IWM for the Russell 2000. They are all in a falling wedge pattern with positive divergence on their RSI and PMO. All right, let that sink in for just a quick moment. Remember, if you've got questions, plug them in. I'd be happy to answer any of them that you may have. Or at the very least, do my best to answer. Okay, moving on. I just showed all of you how the SPX, the SPY, the QQQ, the IWM, they are all in a falling wedge pattern with positive divergence. I also shared with all of you the weekly expected move for all of those main products. Great question. You said you held Disney. Will you be adding to it? Yes. Real easy question there. Absolutely. And let me just, for the sake of it, I'm going to put Disney up here. I'm going to go back to the daily view because it's obviously much easier to get that overall big picture view. And Disney is DIS for the ticker. I believe that with the new CEO or new CEO that was the old president of the board of directors, who was the old CEO of Disney for 15 years, Bob Iger, with him coming out of retirement. And remember, this is all fascinating stuff with Disney. Bob Iger, he picked his successor. Okay? He handpicked him, showed him the job. But at the time when the transition took place, the old CEO, Bob Iger, didn't step away completely. He kept an office. As a matter of fact, he kept his old office. He made the new CEO go get his own office. And he kind of worked behind the scenes. And it was right when COVID hit. February of 2020. That's when the transition took place. So with Bob Iger back, who's been at the helm of Disney for over 15 years, minus this 1-2 year turmoil at Disney, I think is a real good thing for Disney. Now, Disney got to a high of $200 a share. At its peak, it was at 201, I believe. It was at 201. Okay? Now, if I start drawing what I'm seeing here, I do need to change the color of this, but I want to get the other trend line in first. then it's looking like this. You are absolutely correct. And the reason for it, in my book, is that since he led Disney for 15 years, people are very familiar with how he does things, right? So analysts feel comfortable about Bob Iger because he's done the job for 15 years and they know how he works. They know the successes and failures that he's had in the past. So he's going to right this ship of Disney, I believe. And I do add to Disney whenever I can on a red day. Typically for something like this, it's like it's not like here's okay. I'm trying to think of how to explain this. It's not like every red day you buy a little bit. No. Since the announcement of Bob Iger and that little rally that it's had, I wait for really low days, really red days to buy some shares. Okay. And you can use the options market to do that, to get yourself a low price. It's kind of like setting a stock, setting up a limit order to buy it at a particular price or something under that. About the using options to buy stocks, I'm going to take that as what that meant. Yeah, it's basically just like setting a limit order where if I want to buy Disney at $80 a share, well, you know, that would be my strike price. Yeah. Yeah, I feel you. I do. So yeah, super red days. You got a limit order for $80 a share for Disney. You know, maybe you're going to buy 5 shares or 10 at that price, and once it tags it, then it's yours. And you can use options to play that same type of strategy too. But it is a company that I do like, and since the new CEO came back, you can see we've almost got a wedge pattern going here, right? Or we had the big move down, right, which then hit the news about Iger coming back, and now we're in this coiling contraction phase right here where eventually something's going to break. Now, if we go looking on our chart patterns here, where do we see that? Well, sure, it could very well be a falling wedge. Absolutely, right? Price moved down. Now it's coiling up, right? And what typically happens, it breaks out. That's the typical thing for the falling wedge. That's typically how that pattern works. Now, you can kind of see that here. The sell-off wasn't quite as sharp as it is on that technical drawing, but that's fine. It can work the same way. And I love wedges. Wedges are I love them. They're my favorite chart pattern to go looking for, right? I love trading them. Okay, let's get back on track here. I'm going to go back to the SPX for the S&P 500. My average is 92, but 85 isn't too bad to add here. No, it's not. It's not for Disney. Absolutely not. Let me just run back there right quick. For Disney. And this low in the middle of the wedge is 86. Looks like 86 is that low. And then, of course, today, 85. Now, if I were to back this up a little bit and go back to a point in time when Disney was at this same price point, let's see what happened. Okay. We have the drop in 2020, right? Going real low down here, but the bulk of it was here. Okay. And the bulk of that is right about $90 a share. So we're under, that $90 share where the majority of the bounce came from for Disney. And then we go back just a little bit further here. You're going to notice something else on this chart. There's a lot of support at that $90 price point for Disney. So being under that $90 price point in recent years, going all the way back to 2014, December of 2014, $90 a share has been the low point, right? And now that we've got Iger back, anything under $90 for Disney, I think is a good price to have. It's a good price point to get in at. But remember, small position sizes. There will still be some bad news for Disney coming up, okay? Iger can't just go in and flip a switch and then all of a sudden any of their earnings problems disappear. They're going to have earnings problems in the future, in the near future. Parks are going to suffer during a recession. People have less money to spend during a recession. 2023 is going to be a very tough year, okay? So make sure you're getting your house in order. That is definitely something that you should have most certainly started on. Treat your finances at home just like you would if you were running a business. You want to secure your financial health when times are good, to prepare yourself for when times are bad. Okay. So you don't really have the opportunity to grow your wealth during a recession because you got to scrap every penny together to get by, right? Especially if you end up on the side that you got to lose you lose your job and you got to find a new one. That can be a very challenging situation to be in. So always make sure your financial house is in order during good times. That way you are prepared for the bad times. And then when the good times, when they come back, because they do, you will be a step higher, meaning you're not going to have to start basically from scratch and you can move up from there, right? Think of it as, think of it like this, right? If in good times financial health is going up, right? Well, if you prepare during good times, when bad times come, maybe you fall here and then you can start building during good times again, making a higher high and a higher low. But maybe during this time, you don't prepare for the bad times, and you end up down here. And then when the good times roll around again, maybe you only get this high, and you're making lower highs and lower lows. Eventually, you're just moving in the wrong direction when you're doing it this way. But when you are making sure your house is in order, your financial house is in order during good times, you're prepared during the bad times, you get a jump start, you're moving in the right direction. And financial freedom, good financial health, it will come to you when you have a way of thinking about it in this fashion. Businesses, they don't buy companies at the peak, right? They buy companies when they're on a discount. Think of it the same way. When you go to the store, you want that discount, especially with, inflation going on. Okay. Anyways, I've been kind of just chatting it out there for a few moments there. All right, let me get my thoughts here real quick on today. I kind of showed you already on the charts where the SPX, SPY, QQQ, and IWM, how they're all wedging with positive divergences. So I think a turnaround is imminent. It may not be tomorrow. It may not be Wednesday, but it could. I think it's coming really soon. Now, for stocks today, the losses simply continued to mount as fundamental concerns contributed to the further breakdown in the stock market's technical condition. And that's where we get these falling wedge patterns with the positive RSI and PMO. Now, in today's losses, the NASDAQ, if we include the past several sessions, is down 8%. And that's why I'm targeting the QQQ and not just going after the SPX like I would typically do, or the SPY. It's fallen the most. It has more room to make up. All right, continuing on. The Russell 2000, down 7.8%. S&P Midcap 400, down 7.3%. S&P 500, which is your SPX ticker and SPY, down 6.4% in December 1st to now. And then the Dow Jones is down 5.3%. Now, here's some contributors to the weakness today. Meta Platforms. META, Meta. Meta dropped 4.1% today on a report that the European Commission believes Meta breached its antitrust rules. So it came down. But it's got this interesting, almost symmetrical triangle here. Symmetrical triangles break either way, up or down. There's no telling. And let me just real quickly, Meta's definitely got more pain ahead, but just real quickly, if I'm going to do this, I mean, look, we don't have much going on here, but it is a symmetrical triangle, and it's going to break. And they do. Symmetrical triangles break either way. Let me show you on chart patterns here. Symmetrical triangle, where is it? It's right here on the bottom right. Don't worry about which direction it came from. That doesn't matter. What matters is the angle of resistance and support are very, very close to each other. Okay. And then you can see here on the chart, it can break. It's not working with me here. Here we go. It can break up or it can break down. A symmetrical triangle goes either way, up or down. Okay, and that's what we got for Facebook right there. Now, Apple, AAPL, another one in the news today. It was down 1.6% on lingering supply-demand uncertainties as China grapples with, of course, they've got a rapidly spreading COVID case going on over there, or cases. Rapidly spreading COVID cases in China. Apple depends on China. And Apple has fallen significantly here, looking at the chart. But what do we see, really, when we look at Apple? Well, just real quick, Apple's in a chop box. Yeah, it sold off here rapidly, and it did break these prior lows here. But it's been in a chop box, moving sideways. Apple could continue to do that. It's coming into support. Support is not far away for Apple. It's right about the 130, and it's at 132 right now. Bottom right corner of your screen, you can see that 132 is where it closed. 130, there should be support stepping in, and it got down to 131 today. So Apple is another one. Tesla, TSLA. Tesla is one. It was only down 0.2%, maybe 0.3%, but it traded down on two concerns. One, about weakening demand, and two, about Elon Musk and his Twitter involvement. Okay? Now, Tesla, don't pay attention to these weekly expected moves here. I don't update them until Wednesday. So that way, our private investor community, which gets them on Sunday evening, has time to use them for their own trading themselves. Look at Tesla. Look at this. This is just crazy how it's fallen. Good question here. I'll go back to the Apple chart in just a moment. Where do you think Apple could find a bottom? I'll go back in just a moment and point it out on the stock chart. Okay. Tesla, down here, 149. Obviously, all of this is, stock split adjusted. But there's no wonder Tesla just completely fell so far in December. Because when we go back and look, okay, at this price point, what happened the last time we were here? Well, there was a almost straight line run up in price action. Well, when you're coming back down, that's never a good thing. Okay, because price will just go straight down. So you always have to compare the most recent time a stock was at a particular price. What happened then? Because that can give you a little bit of an eye-opener. If you look at the volume shelf profile, okay, we've got an air gap right there where, price just completely ran up first, and then second, just, fell straight through. When you have these air gaps in the volume shelf profile, well, then price is going to move very, very fast through those areas. Now, there's one other thing to point out here for Tesla. If you're looking at the volume shelf profile, you'll see that it's down here, and then it shoots way up like this, or way out like that. That means this red line down here at $50 to $55 a share, there is big support for Tesla at that price point. I know That's like taking $100 off the stock price right now. But there is a huge amount of support at $50 a share. Why is that? Well, because Tesla spent years bouncing up and down in that price point. $50 a share was resistance. Again, all of the stock split adjusted. I don't think it's going to come down to $50 a share. But I did say last week or the week before that Tesla was going to come down to 150. And I even think Tesla could come down and see this support at 130. Okay. And there's a gap there. It's about 150 is like resistance for this area right here. And 130 was support. So anywhere between there, the 150 to 130 for Tesla seems like an area that could hold up pretty well. I mean, we'll see. We've just entered it. We're at 149 right this second. So we'll see if that zone can be held for Tesla. And so we don't forget, I'm going to zoom in here and I'm going to put a box on price. And that way we'll be able to judge it a little bit later on. I'm going to start it at the 150. And I'm going to take it down to the 130. All right. So this is the zone. Tesla gets into this box. I think that's a buy again for Tesla. And it's in there right now. With Elon Musk's Twitter poll that he did asking if he should step down as the leader of Twitter, and he said he would abide by the rules or by the outcome of the vote, over 50% said yes, he should step down as leader of Twitter and bring in somebody new to be the leader of Twitter. Now, I think this is Elon Musk playing a little chess. Elon Musk did not buy Twitter so he could stay at the helm 24/7. He's got Tesla, SpaceX, Boring Company. He's got enough on his plate. Now Twitter added to that. He wasn't planning on staying the leader of Twitter forever. Eventually, he would bring on somebody to take that role. Just like he's got good people at Tesla, SpaceX, Boring Company, brain implants, you name it. I forgot the name of the chip, the brain implants company. Oh, it's right on the tip of my tongue. Oh, well. He's got good people running those companies. So at some point, it was inevitable that Musk would step down as the leader of Twitter. He just did that poll because he knew what the outcome was going to be. So he could seem like he was pleasing the majority. That's my idea anyways, my thought. But anyways, there's Tesla, 149 down to 130. I think is a zone that is worthy for Tesla. All right, now let me go back to Apple and let me do the same thing I just did for Tesla and find a sweet spot zone for Apple. All right, let me adjust this chart. For some reason, these oscillators down here got really big. Okay. All right, let's slide this over. I know somewhere around that 100, 125. I think 125 is an area. Okay, looking at Apple, because I can remember selling Apple when it was in a chop box. All right, 125. There's a blue line here that looks interesting. And actually, if I come over here, okay. So for Apple, it looks like 130 to 120. And let me go ahead and just actually type these in. 130 and 120. I think that's the zone for Apple. So if you're looking to own Apple for the long term, I think that is a very interesting price point to get in. It may seem like a long shot, but remember when months ago, for everyone who's been watching for a while, remember months ago when we did this for NVIDIA? And it was like way under where NVIDIA's actual price was. And then NVIDIA actually came down and touched it. So I actually lowered my expectation and it touched that. So see, looking at Apple, see how Apple just shot up and then it gets into this chop box right here. That chop box, I think, is a good indication of where Apple could potentially find its footing. Okay. I don't really think I'd take it up any higher, just like I don't think I'd take it down any lower. Although you could potentially maybe 115, but that would be an absolute, I don't know, it will go below 115 because there is some support there at 115. I mean, it's just like another little zone here. It's a small one, but there's several areas where it acted as support at 115. So that's another interesting area to watch, but I think I'll stick with my major zone right there, being 130 down. Well, that moves quickly. 130 down to 120. So a $10 zone that looks very supportive for Apple. And if we even look just at the, let me just open this up just a little bit here. At the volume shelf profile, when we include all of these price points, I mean, the median, excuse me, is up here at about 148. So the zone here, I mean, it kind of comes out like this. It goes up and then down and then like so. So you can see where the majority of purchases were, right where all the chop occurred, you know, right in the middle of all that. Okay, so I've got my box there, my zone for where I think Apple could be a good buy and have good support. Okay. All right. Let's see here. Yeah, Tesla. Yeah, let me just make sure I've got all your questions here. Tesla was up 1,700% from the COVID lows, so it's not crazy to think it can go down lower. Absolutely. Absolutely. Let's see here. He made a big mistake of buying Twitter unless he got some plans that no one can imagine. You know why I think he bought Twitter? I think he bought Twitter for payments. There's some things that have occurred behind the scenes before Elon Musk bought Twitter. Okay. And there's like some dots that have to be connected, but they can. When Jack Dorsey was head of Twitter, also head of Square, now what's Square called? Block. When Jack Dorsey was there, he was building protocols, and I don't know, I'm not an engineer, I don't know the technicals, but he was setting up a system that you could use the Bitcoin Lightning Network for payments on Twitter. And from my research, Jack Dorsey got it completely set up all the way to the point where all Elon Musk has to do is flip a switch, but first create a user interface and then flip a switch, and then Twitter's got a way for payments to go nearly the speed of light using the Bitcoin Lightning Network. So using a cryptocurrency, the best one around, Bitcoin, to run the payments. And you could send US dollars to the euro, speed of light. You don't need a middleman in between. You don't need a bank to facilitate that. You don't need the outdated payment processing that we have now that was built back in the 70s. That technology is old. So I think X, okay, the letter X, X.com. Elon, I believe, got that domain when he was at PayPal. When he left PayPal, X.com stayed as property of PayPal. Then, some years later, Elon paid a boatload of money to get the X.com domain. I think his 4D chess master plan for all of this is to have some sort of a X company, or I don't know how he's going to name it or phrase it, that kind of links all of his current companies together and what he's doing and what his vision is for the Earth and for Mars, and to use Twitter as a payment processor on the Bitcoin Lightning Network, making payments as fast as lightning, as fast as the speed of light, or very close to it. You send $1 in US dollar to Eurozone for a euro, and it's done. It didn't have to go through a bank. It went from point A to point B. Input to an export. Wait, did I say import? Import. See, I'm not an engineer. I don't know the technical words to use to describe the actions. But I do believe he does have a plan, and payments, money, Bitcoin are part of it with Twitter. All right. So, yeah, I just think he's got to get out of the public debates about Twitter, and I think things will cool down. Tesla might come down a little bit more, but it might be all right. Okay, let me move on. If you have other questions, feel free to plug them in. I'd be happy to talk about them. All right, let's go look at Microsoft real quick. MSF. Oh, gotta get the cursor back over here. MSFT. And we're almost done. We're almost done. All right, down 1.7% today. Microsoft. Microsoft lost ground today, despite being named a top pick for 2023 from Morgan Stanley. And if we look here, yeah, this is interesting, right? Yeah, now I don't have the weekly expected moves up here because I saved that for later. But if I just look here at Microsoft and look at where the lower end is and look at where it is, it's not far off. It's kind of like right in the middle of this chop that occurred a few months ago, right around in this area. So it's getting close to the lower end of its weekly expected move. And I've talked about the weekly expected move so many times. When price action, this is, say it's right here. When price action gets there, the weekly expected move isn't support or resistance, but if price gets outside of it, then there's a 68% chance it's going to come right back up to be within the upper, and lower areas of the weekly expected move. And the same thing up top. If it goes out of, there's a 68% chance it's going to come back down and go and be within the weekly expected move. So that's why they're so important. They help you to trade on the edges. Because if you're just in the middle, going back and forth, you're just chopping. Just like Microsoft, even though it's been falling for several days, it is coming into support, which is very important. And if you just look, it's been a chop box for Microsoft right here. It's just been moving sideways. But on the low end, probably about 217. I'm sorry, 237. That wasn't a 1. That was a 3. 237 looks like the low end of that support because it catches here with the 50-day. It also catches the 50-day right there. And again, right there. And it's real close to the 50-day right here. So this thing could turn around nearly at any moment in time. The only thing that I might point out is on the RSI, Microsoft's not making a higher low. It's actually moving in the wrong direction. It's putting in lower highs. Now, the PMO is moving up, so relative strength is dropping. Okay, one more, and then we'll move on. I want to talk about Alphabet for just a moment. Look at their chart. GOOGL. Now, Alphabet fell today 2%, mainly just because other tech was falling, right? There was no specific news out there for why they fell. But if we, kind of look here, we're falling into a wedge. I don't know about prior support. It looks real shady. Alphabet could really fall further. My goodness. Maybe 85. The low would be 83 for the year that it would have to undercut. And it's close. You know, it closed at 88.44 today. So it's close to getting down and maybe taking out the low of the year, which is right about 83.4. That would be interesting if it did that before the end of the year. All right. Let me just look. I want to see where the RSI is here, 34. So it's getting down there to being oversold. It's under all of its important moving averages, including the 5-day EMA, which it is disconnected from. So a slowdown, a turnaround here, I think is in the cards for a lot of these plays out there. Now, looking at the sectors today, only one finished in the green by 0.1%, so just barely green, but it was energy. And the reason that the energy sector went up today is because it benefited from oil. We haven't looked at oil in a while. U.S. oil, it was up 1.6% today to 75.47 a barrel. And I mean, look at this. Look at this. It's just absolutely stunning. I don't remember the last time that we looked at this on the live stream, but it is holding that area right there. Looks like a support area right about 73, which does fit in with prior resistance becoming support. So, 73 down to what would we call it? It's about $70 a barrel. If it moved within there, that's a support area for oil. And I am so worried about how Europe and some other countries are going to deal with this winter and the price of oil. Is it going to go up? Or is there going to be an artificial, lid on oil? All right, let's keep moving on. Economic data today. It was limited to the NAHB housing market index. That fell to 31 in December. The expectation was for it to move up to 34. November, it was 33. So it went from 33 in November, 31 in December, and I'm sure it's going to go into the 20s when we get to January. It's not looking very good. Now, Tuesday session will include the November housing starts and building permits report at 8:30 a.m. So this is going to be a real important ticker XHB. That's your home builders ETF. Watching this, it's going to be important when those reports come out tomorrow morning, 8:30 a.m. Eastern. How are the home builders going to react? How are their stocks going to react to the housing starts and building permits? Because permits is a leading indicator for the housing market. Obviously, you get the permits before you build the home. So, yeah. So, it's going to be interesting watching the home builders. Again, ticker XHB for that. And we only have a few earnings report. General Mills at the open, and then Nike and FedEx at the close. I'm curious about FedEx because FedEx came out and gave FDX as the ticker. FedEx came out and gave a big warning about the economy. and their stock paid the price. So I'm curious, and it's just been in the shop box here now for a while. I'm really curious about their earnings tomorrow after the close for FedEx. All right, that's everything that I wanted to talk about today. I'll give you a moment. If you have a question you want to plug in, go ahead and put it in the comments. We'll talk about it. Otherwise, could you please do me a favor? Click that like button. Share this video with a friend. That's tremendously helpful. And then if you can just leave a comment on the video, that would be wonderful as too. But that like button and sharing it with a friend are greatly appreciated. And also, if you want more of the perspective that we give here, click the first link in the description. We try to give value and actionable content that you can use to take action to building your wealth, building your financial health. Okay, well, no other questions, then I will rock and roll here, and I'll see you tomorrow after the market has closed to talk about what happened, why it happened, and what to expect going forward. I am looking for a bounce shortly. I do believe a bounce is incoming, whether it's tomorrow, Thursday, Friday. I do believe one is coming. Okay, these markets are getting a little bit on the oversold part of the equation here, and that's why I'm preparing now for that initial bounce and then take profit from it. All right. Oh, when do you think bad news will be bad news next month? I think the bad news has started to be bad news. We're not seeing, I don't think, since the Fed came out, since the last CPI report and then the Fed last week, I think now is the time where it has switched. Where bad news is bad news, good news is good news. Okay? I do believe that we are facing an economy, a recession. Yeah. A slowing down of the economy. And when those reports come out and say, yep, the economy is slowing down here, here, and here by this amount, and this amount, bad news is now bad news. I think the switch happened with the Fed last week. And then, a lot of it is going to be related to the economy slowing down. That'll be the majority of our bad news. And then once we get to next month, the end of next month, when earnings season begins for Q4 of 22, it's going to be rough for a lot of companies. We're going to get a lot of bad news, and it will be treated as bad news. Because now the Fed has slowed down their rate hikes, the market participants out there, they know what's next. A slowdown in the economy and a recession. How deep the recession? I don't know. But it will not be like the financial crisis. This is being set up in a different way. The great financial crisis, 2008, 2007, mainly people couldn't pay for the homes they were in. They got underwater with their mortgage payments. Couldn't make ends meet, house got foreclosed on. That really hurt the housing market and the economy. But this time, homes have equity built up in them right now. That's something that is tremendously different from the great financial crisis and today. So whatever breaks today for this recession in 2023, I don't know what it is quite yet, but it will be different. Okay. Any other questions? Or we are good to go for today. And I'll see you back here tomorrow. Just giving you one more minute to plug any in if you have them. Oh, also remember that the dollar is playing a crucial role here. Now, it did break out of its falling wedge right here. Not very powerful. I suspect a back test. And then if it bounces and starts rising, then that's going to put more pressure on equities. But if it breaks back down into its falling wedge, then it's just going to continue its downward movement to allow equities a chance to recover and bounce. And I do believe it's incoming. All right. Got it. Upside down market was crazy. Yeah, wasn't it? The upside down. All right. Well, I'll end the live stream for now. Thank you so very much for joining me. I greatly appreciate you, your questions. You're the reason that I even do this live stream. So thank you very much. Click the like button, share the video with a friend, and I will see you in the next video.